Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 7th of October. Let's dive into the week's stock market news. European markets react to Middle East tensions and easing inflation. ECB rate cut looms. European stock markets experienced a downturn amidst escalating conflicts in the Middle East, with the Pan-European Stocks Europe 600 index falling by 1.80%. This decline was mirrored in major European indices, with Italy's FTSE MIB leading the losses at 3.26%, followed by France's CAC 40 index at 3.21%. Germany's DAX and the UK's FTSE 100 index also fell by 1.81% and 0.48%, respectively, adding to the market uncertainty. Growing evidence suggests that the European Central Bank (ECB) may be poised for an interest rate cut in October. This expectation is fueled by a combination of weakening Eurozone growth, as indicated by purchasing managers' indexes, PMIs, and a slowdown in inflation. Eurozone inflation fell to 1.8% in September, its lowest point since April 2021 and below the ECB's 2% target. This shift in the economic landscape appears to be influencing the ECB's monetary policy stance. ECB President Christine Lagarde hinted at a potential rate cut, stating that the latest developments bolster confidence in inflation returning to target and will be a key consideration at the October monetary policy meeting. Further reinforcing this view, Executive Board member Isabel Schnabel suggested a growing likelihood of inflation easing back to the 2% target, omitting her usual caution against premature rate cuts. Meanwhile, at the Bank of England, BoE, Governor Andrew Bailey indicated a potential for more aggressive easing if inflation continues its downward trend. However, Chief Economist Hugh Pill urged caution against excessive and rapid rate reductions, citing concerns over inflation in the services sector and wage growth. This confluence of geopolitical tensions, easing inflation, and signals from central banks creates a complex economic picture for Europe, leaving investors to navigate a landscape of both challenges and potential opportunities. Now our insight into alternative markets, European unicorns. Navigating a shifting valuation landscape. The European unicorn landscape has experienced remarkable growth in recent years, with the aggregate value of privately held companies valued at €1 billion or more quadrupling to €447 billion. However, this rapid expansion, largely fueled by soaring valuations in 2021 and 2022, has raised concerns about the sustainability of these valuations in a changing market. A significant portion of European unicorns were last valued during the peak of the market, and with the subsequent downturn, questions arise about the potential impact on their aggregate value. Analysis suggests that in a base case scenario, the European unicorn landscape could shrink by nearly 6%. This estimate considers factors such as down rounds, the magnitude of valuation adjustments since the peak, and the extent of recovery observed in 2024. While a more optimistic scenario suggests that the aggregate market value could remain relatively stable, a worst-case scenario paints a more concerning picture, with a potential decline of nearly €100 billion, or 22%, in aggregate value. This scenario assumes a more significant valuation correction and a lack of recovery in 2024. However, it's important to recognize that the future of European unicorns is not solely determined by market forces. Factors like a company's ability to achieve self-sufficiency through organic cash flow, the potential for significant valuation increases between funding rounds, and the availability of alternative financing options like debt can contribute to greater resilience than anticipated. Conversely, a potential surge in IPOs could lead to a faster than expected decline in aggregate value as companies exit the private market. The implications of these potential valuation adjustments extend beyond the unicorns themselves. They impact the entire venture capital ecosystem, including founders, investors, and limited partners. Understanding the potential magnitude of these shifts is crucial for informed decision-making and for navigating the evolving landscape of the European venture market. In conclusion, while the future of European unicorns remains uncertain, a careful assessment of market dynamics and company-specific factors is essential for stakeholders to navigate the challenges and opportunities that lie ahead.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.